Hello and welcome to this in-depth discussion on the differences between an accredited investor and a non-accredited investor, and the benefits of being accredited. In this video, we'll cover everything you need to know about these two types of investors, including the definitions, differences, and advantages. So, let's get started. What is an accredited investor? An accredited investor is an individual or entity that meets specific financial criteria and is deemed to have sufficient knowledge and experience in financial and investment matters. The term accredited refers to the fact that these investors have been accredited by the Securities and Exchange Commission (SEC) to participate in certain types of investments that are not available to non-accredited investors. To qualify as an accredited investor, an individual must have an annual income of at least $200,000 or a net worth of at least $1 million, excluding the value of their primary residence. Entities such as corporations, partnerships, and trusts can also qualify as accredited investors if they have assets of at least $5 million. What is a non-accredited investor? A non-accredited investor, on the other hand, is an individual or entity that does not meet the financial criteria or the knowledge and experience requirements to be considered an accredited investor. Non-accredited investors are generally seen as less sophisticated and less experienced in financial matters, and therefore, they are restricted from participating in certain types of investments that are available to accredited investors. Differences between an accredited investor and a non-accredited investor. The primary difference between an accredited investor and a non-accredited investor is their ability to participate in certain types of investments. Accredited investors have access to a wider range of investment opportunities, including private equity, hedge funds, venture capital, and other alternative investments that are not available to non-accredited investors. Another difference between the two is the level of regulation that they are subject to. Accredited investors are subject to fewer regulations than non-accredited investors. This is because the SEC assumes that accredited investors have a certain level of knowledge and experience in financial matters, and therefore, they are less likely to be taken advantage of by unscrupulous individuals or entities. Advantages of being an accredited investor. There are several advantages to being an accredited investor. First and foremost, accredited investors have access to a wider range of investment opportunities. Many alternative investments, such as private equity and venture capital, are only available to accredited investors. These types of investments have the potential for higher returns, but they also carry higher risks. In addition, accredited investors are often able to invest in companies at an early stage, before they go public. This gives them the opportunity to participate in the growth of a company and potentially realize significant returns. They can also invest in hedge funds, which are designed to provide investors with diversification and lower their overall risk. Another advantage of being an accredited investor is the ability to negotiate better terms and conditions for their investments. This is because they are seen as more sophisticated and experienced investors, and therefore, they are in a better position to negotiate favorable terms. Furthermore, accredited investors may also have access to exclusive investment opportunities that are not available to non-accredited investors. For example, they may be invited to invest in a private equity fund or join an angel investment network. Conclusion. In conclusion, the differences between an accredited investor and a non-accredited investor are significant, and the benefits of being an accredited investor are substantial. Accredited investors have access to a wider range of investment opportunities, are subject to less regulation, and can negotiate better terms and conditions for their investments. However, investing always carries risk, and investors should always do the due diligence before making any investment decisions. We hope this video has been helpful in understanding the differences between accredited and non-accredited.